The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.
I want my countdown. Hey everyone, welcome back to another episode of In the Market Trenches. I know we had a bit of a hiatus there, but we're back. We ironed out our calendar. We have some awesome guests coming up for you. What a time to be on a hiatus. We're going to get to that in a minute. It's been a heck of a 2 months, a heck of a start to the year. If this is your first time checking us out, remember you can find us anywhere podcasts are available. We're at inthemarkettrenches.podbean.com. You can find us out at snn.network. You can check us out on the SNN YouTube channel. That's youtube.com/SNNwire. Gary, I've seen you a bunch this year. It's the first time our viewers get to see you and hear you. What a privilege for them. What a 2 months it's been. What the heck are we going to, where do we start today?
2 months. I mean, Producer Valley was stuck in Texas, so I think we got a little bit of a pass on some of it, right?
Yeah.
But there he is. There's the beard of my beloved.
There you go. So,
all right. So we've had a lot go on in the last 2 months. We sort of just had to make a little list. Where do you want to? So I've got meme stocks, crypto, SPACs, vaccine roll. Where do you want to start?
Start at the very beginning. Let's start with the meme stocks.
Is it stocks or stonks?
I believe it's stonks.
All right, so meme stonks. So this one is, I guess, I don't even know where to start. Where would you like to start with this one? First of all, we had no position in any meme stocks at all during the course of this. So we were not trading meme stocks. But I should say that we watched it with great fascination. We were endlessly fascinated by the Reddit crowd, the Wall Street Bets thread, the nomenclature of it all, tendies, diamond hands, paper hands, to the moon, all of it. I was so fascinated, and I'm so appreciative of that, of the nomenclature. And like, I don't know what's going to happen with Wall Street Bets or these meme stocks. I have some guesses, but in my mind, like the language will live on. What do you think?
The language will live on. I had a lot of people reaching out to me that had never purchased stocks before, suddenly wanting to get involved in the market, asking me questions about what's going on. The outcome was positive for some people, negative for others. I think a lot of people got an education on some of what goes on in the market. What short selling is, what that means, can shares be lent out, the huge uproar over certain big brokerage companies and what they needed to do to preserve liquidity. The whole thing was just fascinating to see unravel. All started by people that banded together on an internet forum. Amazing.
Yeah, so like in early January, a bunch of people banded together and then they stormed the Capitol. And then after that was done and they were told to go home, they got together online and they stormed these different meme stocks, essentially, right?
That's essentially what happened.
I mean, they were talking about it like it was Bastille Day. I mean, like, or something like something like that. I couldn't believe it. And, inevitably it wound up in congressional hearings, which I was glued to, and I almost thought about leading off today by saying, I'm Gary Ribe. I'm not a cat, just like the famous Roaring Kitty did. I love that. So that guy is now a folk hero in my mind. I don't know if he did anything right or like I don't know the ins and outs of what he actually if he did anything wrong. But I love that he came out and just owned it. He owned the whole thing. His headband was in the background. He starts off with a meme, I'm not a cat. And he just used his 3 or 4 minutes or whatever they gave him as just an opportunity to pitch the stock. And like, in short, I like the stock. I mean, like, he won. He won. My hat's off to him.
Yeah, I agree. I don't know whether what he did was right or wrong. That's for some other higher power to decide. But he owned the stage.
It was just wonderful. The rest of it I could have. Okay, you had the guy from Citadel there, and okay, you had the Melvin Capital guy there, and it was basically just an excuse to grill the Robinhood guy, right? For the most part.
Pretty much.
Yeah.
Yep.
And,
so let me ask you this: do you think it's over?
What do you mean by it?
This idea that a pocket of people are banding together. As far as I know, the Wall Street Bets Forum still exists. It existed all throughout 2020, or at least mostly throughout 2020 that I'm aware of. Do you think there's enough power behind it to replicate what happened in early January?
Gee, I don't know. So the hard part about it is essentially a lot of people are clubbing up to create price action in a security for non-fundamental reasons. I have to think that somebody steps in and starts to look at it and really presses harder on what's actually going on there. And maybe if it's not through, maybe it is through sort of the brokers or looking at stocks that are trading on multiples higher on no fundamental news. Maybe there's a little bit more oversight there. I don't know. My guess is that we see some of it, but and this isn't really new either. This happened 20 years ago when there were Yahoo message boards and whatever else was going on at that time. So it's not really new. I don't know. What do you think?
I don't know that we'll see it to the same magnitude that we saw before. I think some of the names that were being talked about on the forum were in a pretty unique position where you actually could create a corner in those stocks just because of the market structure and the technicals that were going on behind the scenes with a massive amount of short interest in the names. I also think another issue that you had is Roaring Kitty was definitely a figurehead for some of these names. As this became more popular, everyone's going to be pitching their own stocks. And so how do you figure out how does the group figure out which ones to follow? I don't know. I don't know how they latched onto these. I don't know if it was the price action that just made it attractive to other people, or I'm sure it was, but I don't know that you get that again.
Yeah, I'm sure this kind of thing will occur again in various ways, shapes, and forms. I don't know if it will emerge from this same Reddit thread or not, or somewhere else, or what the heck else is going on. We follow a lot of these things that are fairly, a little bit less liquid, and all of a sudden we see these things moving on, things that don't have a lot of volume picking up lots of volume. And you sent me a funny meme, which is it's a meme from Toy Story where Buzz is stuck in the booth with the aliens, and they have the claw, and the claw picks up one on top of Buzz, and he's being pulled up to the sky, and he's just saying, "I've been chosen." And that's kind of that is the perfect meme to describe what's been going on with a lot of these names. And we're not involved in any of that aspect of the choosing. It's just sort of watching it has been sort of, it's just been astonishing to watch. And so, I think, at this point, Robinhood's reputation is pretty well tarnished, but I don't know where else people are going to go to get the same kind of thing. That a lot of that congressional hearing seemed like just sort of an excuse to ask Robinhood a bunch of questions and maybe loop in the Citadel guy here and there for the payment for order flow stuff. But which there's pros and cons to that whole thing, but which I don't think we should get into. But I think the smartest thing that Robinhood could do at this point is maybe have Roaring Kitty be their mascot. I don't know. What do you think?
Is it the equivalent of the E-Trade baby?
Yeah, I couldn't think of money better spent than getting that guy to be your than if they spent their money to get that guy to be their spokesperson. Could you?
No.
Yeah.
They have some extra cash to spend.
Yeah. No. Whatever. All right. So congressional hearings, a lot of theater.
Congressional.
What else? Anything else there?
How do we? No, I don't think so. We'll see if there's any change that comes out of it. I'm not convinced that there will be, but
yeah, my guess is that there'll be some tighter regulatory oversight on sort of the activities of various message boards and what have you, and sort of looking into that aspect of things. But I mean, I don't think, as far as I can tell, I don't think there are any new rules that need to be written to address this. Like it seems like, once the risk got to a certain point, people went upstream from the brokers and put risk management in place. And people didn't quite understand how that whole thing could work. And now they've gotten an education on what can happen. So, I don't know. So it sort of seems to me like things kind of work like they should. Now, if you have certain brokerages that are facing that kind of stress under, sort of the trading activity in one stock or a handful of stocks, if we move to our next topic, which could be crypto, a lot of them are now some of them are now enabling trading in crypto. And that makes me sort of wonder what kind of exposure could emerge from that kind of activity. And I don't know really what the plumbing looks like there. But crypto's been the story of, things like Bitcoin and what have you. And I think, full disclosure, I think we both have a little bit of Bitcoin in like a Square wallet or something. Nothing major, but just something to sort of think around with. And we've been sort of watching that, just sort of, interested and fascinated, because we're taken with the idea of government non-government money primarily as an interesting idea. But what's been going on there has been nothing short of fascinating. Even this morning, just the whole ecosystem and infrastructure behind it. You've got this thing called Tether, which people were swapping into to then access the exchanges, and but then you've got sort of the idea that this thing could sort of mainstream, which I'm not even sure necessarily what that means, because the whole idea of non-government money, I mean, if you're seeking to avoid the government, in essence, you're sort of seeking out lawlessness. And so
right.
I don't know. It's unclear to me how exactly that mainstreams and what happens as a result, but I don't know. We've been sort of keeping an eye on that, talking about that, at least amongst ourselves.
Yeah, I mean, I think the non-government money part is what turned me on to the idea of crypto. You had asked me a question, I think it was yesterday, of how much crypto do I think is just locked up and dormant or lost. And anecdotally, I see articles all the time of, so-and-so had this wallet over here, they forgot the password, and now they can't retrieve their coins. So I don't know how much of the crypto is locked up in there. I know as more people die, either the life expectancy runs out or some sort of sudden death, if people don't factor that into their estate plan and telling their beneficiaries or the executor what their passwords are, you could have a lot more coins just locked up in virtual wallets, and that just stays there permanently, which reduces the ultimate supply of crypto out there. And I don't know if could that be a longer term 40 to 50 year problem? Possibly. I don't know. I think it's really fascinating to think about.
Yeah, I mean, it does seem to be, the idea of it does seem to be sort of mainstream, but you're getting some real pushback from regulators, like the New York AG today with the Tether stuff.
Right.
Janet Yellen, who's the new Treasury Secretary, does not seem to be a fan. So it's hard to see exactly how maybe we're not creative enough to know how it takes shape. But to us, the core idea of non-government money is an interesting one. And, we can also see it sort of like, we own a little bit of gold exposure in our portfolios, and we can sort of see gold donating share of it's a similar idea. It's sort of like non-government. It's sort of this libertarian idea of non-government money, and you're marrying it up with tech with the tech crowd. So neo-libertarian tech folks are embracing the idea of non-government money, and you're definitely at its core, they're similar ideas. That non-government money. So you see some share donating going on, even as the printing presses sort of run full bore. It's been just sort of fascinating to watch. You can see an argument where, well, maybe some of the real people who are really bullish on this thing are right, and maybe some of the people who are bearish on it could be also right. And maybe it's one of those things where you sort of fake it till the Bitcoin in particular was able to fake it till they made it. But it's sort of like a buddy of ours, basically said, you don't want to short somebody's religion because a religious belief is, there's no maths to it, and it sort of can get crazy. And some of the stuff it borders on religious belief, right? And so as you have this sort of religious fanaticism, you have more and more people. Now, I studied theology. You may not have studied theology, but there's this thing in theology called Pascal's wager. Are you familiar with this?
No.
Okay, so I'm going to drop some knowledge on you here. So Pascal's wager, he was a philosopher, he was a mathematician philosopher in the 17th century. Don't hold me to this century. But his mathematical proof for belief of God was simply that my downside is theoretically infinite, and if there's an infinitesimally small probability that I'm right, the upside, my expected value from belief outstrips any value from non-belief. And I think you're seeing that same idea applied right now to crypto and blockchain and crypto and Bitcoin in particular. I think perhaps blockchain is a separate matter. Blockchain may be a technology that's searching, a problem in search of a solution, but the idea of non-government money, that's the religion, right? And so you see a lot of market participants making that implicit wager now. To me, that when you frame it that way, it kind of seems rational. But a lot of the stuff you see going on in and around it, like on Twitter this weekend, people were changing their picture to have the laser eyes to, I'm not even quite sure what exactly, but it had something to do with crypto and, the money that somebody may or may not have made owning crypto. I'm not up enough on that kind of thing to really know, but like, it's just sort of, it's taken over at least a good piece of people's mind share as they interact with various markets. And, for us, we have a lot of questions about it, and we try to sort out these things, and, we look at various vehicles to maybe do it or not do it. And we just have so many questions, and it's so hard. And so to date, we've done nothing but dink around with some Square wallets and just to kind of understand, oh boy, isn't this fun? Anything in that? What do you think about anything to add there?
No, I don't know if there's much more to talk about with crypto at this point. I think that pretty well covers us, at least for the first 2 months of the year. Anything else? Should we move on to SPACs?
Yeah, I mean, this is another one. I mean, all kinds of companies are coming to market this way, and it's interesting that this has sort of been discovered. Man, the amount of money being raised this way is just astonishing, and the amount of money that's parked in these vehicles, sort of ready to be deployed, is just it boggles the mind. What do you think of this? Do you think this is a good thing? Do you think it's a bad thing? Do you think it just is?
I think it just is. I don't think it's a good thing or a bad thing. I think if you don't understand the incentive structure of the SPAC sponsor, it could be a bad thing. But I think it just is.
To be clear, the best place to sit in this whole value chain tends to be just as the sponsor that gets the deal done, right?
Yeah.
So for small,
That's.
Yeah, I mean, I think it just is as well. I think it's interesting that, I think that, my chief complaint used to be that companies were waiting so long to become public that, basically the VCs sort of squeezed a lot of the juice out of the company, and you were getting, as the public market investor, you were sort of getting the last, if anything, there may not be a lot left for you to really enjoy. I think SPACs may have kind of an opposite problem in a way, where I think you're seeing a lot of what I would call just VC companies looking for, public markets money because it's there and available. And so some people are championing that as it's a way for public market investors to access VC, but I don't know. I mean, yeah, okay. These are VC stage early to mid VC stage. A lot of them are early to mid stage VC companies, but is that a good thing for the average public market investor? Do they know what they're doing when they're looking at those those companies that are at that stage in their life cycle? It's hard to say, right?
Yeah, I mean, if you're a venture capital fund or a seed investor, I'd assume you're at least accredited. Most likely, you're a qualified purchaser, or you represent a fund or an entity making the VC investment. If you're a public market participant just investing in a SPAC, all you need is a brokerage account.
Right.
And so there's a different level of sophistication, education, and what's going on in the investment process, in the investment due diligence, that I don't think that the average person has.
And I think the big question I ask before I consider a lot of things is why do these people actually want my money? If I'm a VC and I've got a really, really great idea, why am I not going to Benchmark or to, Andreessen, these big VC firms? Because the dispersion of returns in VC, there's a lot of dispersion, and the biggest firms have the reputation, and they earn a lot of their returns from just not a lot of their returns, but they get access to things because they provide sort of the seal of approval, which will then draw others to their companies. And sure, they provide expertise and all this other stuff. There's a lot of things that they provide, but at its core, there's a signaling effect to raising money from these really prominent VCs. Mm-hmm. If you're choosing to then exit via the SPAC,
why?
Or you raise money via the SPAC, I don't know. My feeling is that most there may be a few hits, maybe a couple things that work out, maybe okay, but a lot of this is gonna. SPACs have going into this had a pretty negative reputation, and for good reason. Maybe this time around there's slightly better outcomes because there's more. I'm going to say more reputable people involved than the previous goes, bigger established institutions and all that sort of stuff. But I don't know in the end that the average outcome will be all that different. What do you think? Or the average outcome maybe a little bit better, the median outcome may be the same.
Average outcome may be a little bit better. Yeah.
In the sense that you may have one or two that maybe they do win big, right? Whereas before, like a success story in SPAC land previous to this was maybe something that just didn't go belly up. They were able to actually have a real company after a few years. In this case, maybe there's some VC type companies that actually, wind up being the next big thing in one of these areas. But, if there's a dozen, sort of LiDAR companies or, EV companies or whatever it is trying to sell the same 5 OEMs, I just think the nature of that is going to lend itself to maybe one or two of them work out, and the rest of them are going to be disappointing. Would be my sense of it.
And how long before we think you have a good assessment of what the outcome is?
I think it depends on how long the money's flowing. So as long as the money remains free and widely, it's a liquidity thing, I think, is what we're seeing. There's just a lot of money flowing, and this is just a place for it to sort of flow to. And so as long as the money is flowing, I think it'll keep going. Maybe I'm wrong. Maybe there's some regulatory issue. So, we haven't talked about this, but there's a couple different ways companies can come to market. One is through a traditional IPO process where you have bankers involved. You have a traditional S1 where you have to provide a lot of information about the company. You're not allowed to make forward-looking statements, all that sort of stuff, right? The other is sort of a direct listing where it's the same kind of thing as a traditional IPO process, but instead of, it just directly lists on an exchange as opposed to finding investors. And banks tend to like that less because they tend to make a little bit less on average. And then there's this. And the difference with this is the companies that are coming to market this way are allowed to make a bunch of forward-looking statements. And so,
right.
I kind of wonder if you're not allowed to make forward-looking statements because it's technically happening via a reverse merger, and since it's happening via a reverse merger, you're allowed to make forward-looking statements. And so I just sort of wonder if there's going to be some sort of rules that come to the market that address this, because it's essentially a regulatory arbitrage. And so let's see if people like this so much when you can't make a bunch of crazy promises, or rosy promises, we should say. And I'm not so sure. I'm not. Maybe it won't matter. Maybe it will. But part of the excitement around this is, these guys are allowed to come out and sell a dream. And if you're not allowed to sell a dream, and you've got to sort of, it's the conversation is more centered on sort of the current reality as opposed to what it could look like 5 years out. Does that ground things a little bit? Possibly. I don't know.
Yeah.
So
yeah, I don't know.
But we're seeing an ever increasing number of these named after things like the Queen's Gambit, or I saw one that was like yet another SPAC. I mean, it's just I hope we see some like truly crazy, even like I don't think that we've seen how crazy things can get in general. So I'm sort of just looking forward to what that is and how it unfolds and evolves. I don't know about you.
I think there are a lot of unwritten chapters in this book. We'll see what happens. I just hope not a lot of people get hurt in the process.
So what else? Producer Bob, you have time for one more topic, or should we wrap it up?
Yeah. Producer Bobby says yes.
That was an either or question. We got an answer that just said yes. What does that mean?
Yeah.
Okay, one more topic. So we got vaccine rollouts and reflation trades. So where do you want to start?
So if we have one more and I have to pick, I don't.
I think they're related, so we could.
All right, you want to try it? Go for it.
So we've seen a great reflation trade in the market the last month or two. So a lot of the folks that have been sort of betting on some of these great reflation trades, a lot of that's been helped by the vaccine rollout. We're not epidemiologists, but we can, we've done a fair amount of forecasting, and it seems like based on the current trends, we're hurtling towards population level resistance, and hopefully that gets reached sometime before we'll call it. I'm gonna set the over under at Cinco de Mayo. What do you think? It's a little over 2 months.
I think that's a fine line. I don't know what you're referring to as normal, but yeah, I'll go with the under.
I mean, maybe there's a greater percentage of people allowed to do things, sort of indoors or go traveling or whatever. Maybe you're still wearing masks, but you're allowed to live your life as you want.
Yeah, I'll go with the under. I mean, I think you made a good point to say concerts probably won't be coming back online for a while, because how can you actually plan a venue or a concert tour at this point? Producer Bobby doesn't like your thinking on the topic.
I think that doesn't have anything to do with whether or not we should have concerts. I think it just takes more. There's more lead time towards planning a concert and a tour than, say, I don't know, having a schedule of sporting events, and whether or not you have fans is irrelevant because you have media rights. So that's
the NFL is going to play their games.
Can I tell you just how impressed I was by the NFL this season? They got every game. And if I had to make a wager at the beginning of the pandemic, which sporting organization would not give an F about what people think, and they're just going to plow right through, it would have been the NFL. And damn it, if I didn't see a game with a third string wide receiver at the quarterback. And I just got to say, in the midst of it, they gathered all this data on how the thing spreads and everything else like that. And as far as I can tell, nothing terrible happened other than, having to see a really terrible game with a third string wide receiver at your quarterback. Maybe a handful of games like that. They had a real season. And so but there's this great sort of, as things sort of reopen, this great reflation trade on, we've seen it in energy. We've seen it in financials. We're seeing it. I think there's going to be some revenge travel. There's a lot of sort of pent up demand to do stuff. And it'll be interesting to see how that actually unfolds, because I think for certain aspects of this, people are excited, but to what extent is it transitory? The solution, if you're going to get high prices and things, a lot of times the solution to high prices is high prices. That's pretty easy. So we're very curious to see how well things stick.
Right.
How are you viewing it?
Yeah, I think similar. At this point, I'm forward looking, trying to think about which sectors may not already be priced or fully appreciated for what they are as we go into this hopeful new normal of what life looks like after we get herd immunity or after the vaccine is so widely dispersed that it's less of a concern. And how much of the work from home trade actually sticks too.
Yeah. I mean, I can tell you, like, categorically, I think work from home is, like, if you own a business like we do, I mean, like, I don't know, I can see an argument for a certain percentage of the time, but like, it's really hard. I think it's easier said than done if you want it to be more than, unless you're talking about certain roles or whatever, 20, 40, 2 out of 5 days, or 3 out of 5 days tops for some positions. But like the more you have to be involved, like, I think the work from home thing is gonna be the thing that sort of slowly recedes, is my view. Like, and it'll be enabled, like, if people who want to do it for a day or two can do it, but like, I don't know that it's going to be the norm that other people think. I mean, like, there's a in my view, it's sort of out of sight, out of mind. And so if you're out of sight, you're out of mind. And for people who give a damn at all about their career progression, they're going to hate that, right? Like,
yeah, totally. It's like people, the height of the pandemic, people were questioning, is New York City dead? To me, the answer is no. It's long term. No, it's, the networking opportunities there. It just offers too much.
I mean, it could be dead because it's underwater in, 50
no, that
years.
could, yeah. I don't think climate change was one of the topics for us.
That wasn't the topic du jour in March, for sure. But
No,
it's not gonna be dead because people are working from home. I don't think.
No, but if you work for a big law firm and you have 2 people that are associates and one's there every day, that's in everyone's faces, in the partner's faces, and the other is taking their liberties working from home, I don't know. Do they get treated evenly? I'm not sure. We'll see.
I think as it relates to this stuff, I mean, it's going to be people are going to start to lose out. People who are doing the remote stuff are going to start to lose out to the people who are doing in-person stuff, just because, of some of the reasons that we cited. I mean, like, somebody's going to go get a sale that they otherwise wouldn't have gotten. All these things are going to happen. And all of a sudden it's going to be like, well, we got to start to get people in here, and, you and I talk about this. I mean, like, if first, our firm is just the 3 principals at this point, but if we had, staff, how long would we want them doing things remotely? If like, it's a good question. Like, so I think, as we look at this, our job is hard, but our job should always be hard. And, it's sort of the burden that we carry.
Yeah. Yeah.
What else? Any other topics? Did I miss anything? I jotted down a few. Did we hit them all?
I think we got them all. Yeah.
Okay.
All right.
Bobby's telling us it's time to land the plane. So,
all right.
Been a long time since I've been in a plane. Please land one.
That's great. Thank you, everyone, for joining today. Like I said, I know it's been a while since we've checked in. I think we're all caught up on the year. We have a great lineup of guests coming up. We're really excited. We're going to be back on a regular schedule, and we look forward to talking with you. Remember, check us out anywhere podcasts are available: in the markettrenches.podbean.com, snn.network, or the SNN YouTube channel. It's youtube.com/SNNwire. Gary, always great to see you, even if it is virtual. Bobby, it's great catching up with you too. All right, everyone. We'll talk to you soon.
Take care.
The information in this podcast is educational in general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.